All right, greetings everyone. Welcome back. Chris here as always. Today we are going to be getting ourselves started off by going through the wonderful world of breakouts. Before we get started though, as always, I am going to go through a few disclaimers naturally. Just bear with me. We'll get through them as soon as possible and we will be on our way into the juicy stuff. The first disclaimer I'm going to go ahead and read to you guys. After that, we're just going to leave them on the screen for a little period of time. You can screen capture them or just read them yourselves. So here we go, guys. Earn to Trade is provided to you for educational purposes only. Earn to Trade is not a financial services company. Earn to Trade does not accept any liability for loss or damage as a result of reliance on the information contained herein. This includes educational material, price quotes, and charts and analysis. Please be aware of the risks associated with trading the financial markets. Never invest more money than you can risk losing. The risks involved in trading are high and may not be suitable for all investors. Earn to Trade doesn't retain responsibility for any trading losses you might face as a result of using the data shown on its websites or webinars. The data and quotes contained may not be provided by exchanges but rather by market makers, so prices may be different from exchange prices and may not be accurate to real-time trading prices. Any examples used are not a recommendation to buy or sell or a solicitation to buy or sell futures, options, bonds, or binaries, or securities of any kind. The information and strategies and techniques discussed herein are the property of Earn to Trade LLC. They may not be shared or distributed to another party without the express written consent of Earn to Trade LLC. Any trademarks or copyrights referenced other than Earn to Trade are the property of their respective holders and not Earn to Trade LLC. Wonderful. So moving on to the next one, guys. Like I said, please just take a moment to screen capture it or read it, and we will get through this shortly. Moving on to the next one. Same thing, folks. Once again, just take a moment to quickly read through it or screen capture it and read it later. Moving along. And finally, one more. Alrighty. So once again, folks, today we are going to be covering breakouts. My name is Chris. I am a mentor and trader at Earn to Trade. Many of you know me from the daily recaps or from visiting one of our previous webinars or watching them after they've been pre-recorded, well, not pre-recorded, after they've been recorded live and you caught it after the fact. But regardless, I am going to be covering some breakouts today, and essentially what we're looking to do here today, folks, the goal of this webinar is quite simple. We want to continue expanding our knowledge of trading and learn about breakouts on live charts while we show you how to find these areas in real time. Meaning I'm going to be scrolling through my charts, which are currently active, and I'm going to find these when these haven't been planned out ahead of time. I'm going to do it and find them in front of you in real time so it's as authentic as it can possibly be. We want to continue expanding this knowledge, like I said, about trading in general, but the goal is to learn about these breakouts, find them in real time, and after the webinar, you should be able to begin finding these areas on your own personal charts quickly and easily. Or at the very least, you should be able to begin practicing them and becoming more proficient with breakouts. We want you to be able to watch your charts throughout the day and be able to say, hey, this is a breakout, or hey, this might be a breakout in progress. We want to just add one more tool to that toolbox. Obviously, with all things, knowledge is power, but in trading, it is specific, or it is especially true. The more we know, the more we're aware of, the more opportunities we might have to pull profit. Now I'm going to go ahead and switch on over to my charts, guys. I'm switching the screen share over to the charts. Here we are. Okay, so this is currently the euro dollar. We're looking at a little bit of a forex pair here. We're looking at, once again, the euro dollar, and this is what I'm going to be using to go through this webinar and look for examples and talk about things and try to make it clear. Now, as we go along, folks, if you have any questions at all, please feel free to type them on into the chat box. Ask me any questions. If you are having trouble or you need me to slow down or anything along those lines, just feel free to, type it up. If I don't answer it right away, I will get back to it later. Don't worry. If I'm in my groove, I don't necessarily want to stop, but please ask the question when you first think of it. That way you don't forget it, and then it's written down and we've got it logged. So, like I said, if you don't ask any questions, that's also not a problem. I'll take that as a sign that you're understanding what I'm talking about, and I'm doing well. So, no pressure whatsoever. Just have a good time, relax. I'm going to try to keep this as casual as possible. I don't want to make it sound like it's like we're here at some kind of work camp. We want to keep this, fun and keep it a healthy learning environment. So taking a look at the euro dollar, guys, to get us started off with, we're going to talk about essentially what a breakout is, okay? A breakout in and of itself, some of you are obviously familiar with this, and if you're not, then please pay attention, and if you are, then hey, touch up on it. It doesn't hurt, and practice always helps. It doesn't hurt. So a breakout is when price moves outside a defined support or resistance level, and those of you that have attended or watched our support or resistance webinar, this should be coming quite easily to you, as the information that we talked about in there is kind of a prerequisite to this. So once again, if a breakout is price moving outside a defined support or resistance level a breakout is price moving outside a defined or support or resistance level with increased volume. Right? That's the key word, increased volume. That's what we're looking for as traders. Once we find these support and resistance levels, which we'll be talking about and I'll be marking off here shortly, it's the increased volume that we're looking to cash in on. It's the expectation that the market is going to do something strongly that makes the breakout so valuable. So someone trading a breakout, for example, a breakout trader, if you will, the breakout trader would enter a long position after the price moved above an area of resistance. Or, if we were to flip that around, a breakout trader would enter a short position after price fell below an area of support. Once price trades beyond the barrier, volatility, once again, barrier meaning that area of support or resistance that I was just talking about, the volatility tends to increase, and prices usually trend in the break's direction. That means if we expect price to break through an area of resistance, we're going to continue to expect price to heavily move in that direction potentially. And obviously the opposite holds true for the area of support. Once we move below that area of support, we're going to expect volatility to kick up and the exaggerated moves in the directional heading to be in that direction. Meaning if we broke below support, we'd expect price to only pick up speed and travel farther below that area of support. The reason breakouts are such an important trading strategy is because these setups are the starting point for future volatility increases, aka large price swings in many circumstances. They're a great location to begin identifying future long-term trends. Breakout trading is one of the core aspects of technical analysis trading. It is a very basic way of technical analysis, a very basic way of trading via technical analysis, but it is a very powerful tool. It has been around since the beginning, and it continues to thrive with those that use it correctly. One of the beautiful things about breakouts, you might be wondering, hey, this sounds wonderful to me, or I already know that breakouts are pretty good, but I don't really know when I can find them. Well, the beautiful thing about breakouts, just like support and resistance, anywhere you can find support and resistance, a breakout is possible, which means a breakout is possible and occurs in all types of markets. On any time frame, any market, any asset, anywhere you could possibly think of, a breakout is theoretically possible. Once again, any area that a support or resistance level of sorts could be held, that includes trend lines, folks, which we'll be talking about soon. Any area that some level of support or resistance can be found, there in turn has the possibility of a breakout occurring. Very simple concept, but once we understand it and know how to trade it and possibly use it as an entry point, the better off we will be. So when trading breakouts, it's important to consider the underlying assets price in terms of the support level, the strength of the support level, or the strength of the resistance level. The more times price has touched that support or resistance level, generally speaking, the more valid these levels are, which then in turns to a more powerful anticipated increase in volatility once price passes beyond these areas, right? Now we're going to go ahead and next what we're going to do, guys, is I'm going to switch on over to finding some examples for you, but I don't want to talk too much with just the charts being not drawn on just yet, because I know some of you are more visual learners. I myself am a more visual learner, so I'm going to see, before I go too deep into this, I'm going to start drawing some examples off here. And once again, guys, if you have any questions as we go along, feel free to ask, feel free to type it down, and I'll get to it when I can. There's no stupid questions, guys. It would only be stupid if you had a question that you didn't ask it. So let's go ahead and start off, shall we, by looking for an example of a support breakout. So we'll start off by looking at a support breakout, then we'll work on to possibly a resistance breakout, then we'll get ourselves into some trend line top and bottom breakouts. So that'll be our heading. So taking a peek here, let's look for some support breakouts here. Now in a bullish market, it's not going to be so prevalent, obviously, because in a bullish market, we're expecting price to be rising mostly. And generally speaking, if you're having a support break, that is price heading down. So let's see what we can find here. Here's an interesting little area that I'm going to talk about. We'll use this right here. Now, I'm going to go through multiple examples, so if this isn't the prettiest example that you've ever seen, don't worry. We will be moving along to others. All right. So what I'd like to focus on is this level, essentially right here. Okay. Now, it's not the straightest line in the world, but it's pretty close. Once again, I freehand drew that. But what we've got here is I'd like to focus in, on this area right here. Right here and right here. So essentially what we have around this price point, which happens to be somewhere near the 1.2250 on the euro dollar. Now this is a relatively recent price occurrence, so this makes it a little bit more exciting. Now we have an example of support holding over here. We have an example of support bouncing price up off of it over here. We also have a beautiful example of a false breakout right here, but we'll talk about that shortly. So anywho, we have an area where price has found notable amounts of support. It's an area that price has come down to. It's an area price has come down to and bounced off of multiple times. It's an area that buyers have temporarily, if you will, beaten the sellers and changed the directional heading of price. Now, we know that often from our previous talks and our previous webinars and lessons that it's very often that an area of resistance or support, when passed through, generally becomes the inverse of whatever it was. So an area of support in this situation, once it was passed through, it's not unrealistic to expect it to begin functioning as an area of resistance. And it looks like we had a little bit of pressure right here, but not quite all the way there. But afterwards, we did work our way through it. Not a whole lot of resistance. We had a little bit of fight in that little candle before, but we worked our way back above this previous area of support, and it then became support yet again. We can see that right here as the market sat on top of it after coming down to it and losing some steam here, as you can see by the long wick on top of this candle, and ran down to the support directly at this area. We went ahead and found some strength. The market stopped falling and in turn began to rise. After this time, giving us some confirmation that support is here, we began selling yet again. The sellers were determined to get through this level. They wanted to get back underneath this area of support. So what happened? They started picking up the selling speed. The market started falling. Not only did it start falling, it started picking up momentum. All of a sudden, we have a very large bearish candle that went ahead and smashed right through this area of support. This is a very powerful bearish candle in all terms, in all regards. When you just look at it from a pure technical analysis perspective, and in terms of Japanese candlestick patterns, we have a very, very large, very powerful, with very little to no wick. In this case, it essentially has zero wick on the top end of it. It has done nothing but simply, this candle tells us the price has done nothing but pick up a lot of speed going downward with very little fight from the buyers. It has only traveled downward essentially for this entire candle, and it has closed well through. This is a very clean example of a powerful break on a candle. Now, we don't want to jump in too quickly. We want to make sure that this break is being accepted by the market. So generally what I like to do in this situation of this break of support, once again, we're talking about breakouts here. When we have a break in support like this, generally what I like to do is wait to see what the next candle does. Generally, the next candle is going to let us know if the market's accepting of this breakout, or if they consider this just a temporary freak accident or an occurrence of volatility potentially, and want to spike price back above. So when we take a look at this next candle here, which I've kind of gone ahead and actually drawn over, so I'm going to redo this real quick for you folks. So once again, the focus area is going to be right here. This is going to be the area that we're focusing on. And right at this candle, okay, we have our break. Now, what happened after the break? Well, the next candle came, tried to push upwards a little bit, and was unsuccessful. That's our first sign that the market is accepting it. We didn't immediately spike back above. But if say we wanted to be extra cautious, we want to make sure that the market is accepting of this breakout, we would say, okay, well, what's the harm in waiting for another candle? Now, you wait too long, you might miss your opportunity to get in. But if you jump too early, you might jump in before you're given enough confirmation. So it's a delicate balancing act. It's just like a dance, as all forms of trading. So essentially what we've got here is another candle came up and tested. It kissed this line exactly. Right there. I'm drawing over the wick to make it white so you can see a little bit better. Went directly up to this area, the same price point that price had previously been bouncing and traveling upwards from. Now in this situation, now that we've fallen below it, it is working its way up to it and getting stuck, and price is looking to travel downwards. So because of this rejection, we have a long wick on the top of that candle where price came up, rejected from this area. It's at this point that we can say, all right, it's very possible that the market is accepting of this breakout, looking good, possibly looking for a sell around this location. The closer to the level, the better, because if this new area, this level that was previously support, is now functioning as resistance, we can imagine it as a wall, and we want to put our back as close to the wall as possible, so we have the least amount of drawdown expected when we look in for this short. Once again, we'd be looking to sell because we broke support. So when we break support, we're going below support, and we expect that future area of support, or that area of support, to become a future area of resistance. And at this point, it showed us confirmation that it was an area of resistance. And once again, any opportunity to get in, the closer to this area, this newfound area of resistance that was previously support, the better. So we're going to jump in for our sell and say we get in for our sell, and off the market would have gone down in that direction, down, 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 down. And it wouldn't have been until all the way down here that the market decided to start transitioning again, and it appears to have found support around a previous bottom as well. Somewhere around that 1.2220, we have pinged off the market a couple times on this current example. So that would be something we'd be on the lookout for as we approached it, because of this swing low down here. So nonetheless, we have an example of where a sell entry would have been very much so possible based on, or a short entry, if you will, based on a breakout. That is what a breakout looks like. It is a candle closing below an area of support, or a candle closing above an area of resistance. And like I said before, this can also be applied to trend lines, which we will be talking about, and that will be some of the examples that we cover here shortly. But beautiful, beautiful example right off the bat. Like I said, it might not be the most perfect example in the world, but really, you can't really complain about this. We've got a very clearly identified area of support, very clear area or example of rejection after passing through and trying to come back above. And not only did it reject here, now this part is a little bit more irrelevant, but it kind of confirmed that this level was in fact the level as we worked up to it again and rejected almost in the same fashion, right here. As we worked our way back up to it and kissed that line, the market had a nice rejection here. We continued to try to fight into it, and still the sellers were holding the buyers back, and we just could not puncture through that level until finally over here when the market went bananas. But nonetheless, we could also consider this as an example to look for a breakout as well. This is another if we were to just look at this and say, hey, you know, that level that we were just talking about, this could be an example. This could be our next example. So let's go ahead and use it. I'll try to get as many examples out here as possible. But taking a look at this level, once again, we had support. And then after the breakout, like we talked about right here, after the breakout, we had an opportunity to get in for our sell, okay? And then after working our way down here, we found some support, and it's at this location, after finding support and the market seeming to change direction, that we'd realistically be wanting to look into exit our position and preserve our profits before this long bullish ride. There was actually a very slow period working our way back up here where we could have gotten out at any time with profits. We would have had to really overhold this trade to actually have even come close to doing any damage. And realistically, even then it would have been hard, because if we used our entry point as also our exit point, seeing how we were already in the profits, in order to never go beyond, you know, break even, the market essentially only made it to just about break even and then went back down again before coming back up. So a lot of opportunities to get out of that previous example with some profit. That's good. But as we look our eyes a little bit farther to the right, we're given another example here. Now, we just talked about an area of support being shown as a breakout being found after pushing below an area of support. Now, this area of support that became an area of resistance to the market, okay, both here and here, this area then again was broken again, I'm saying the word too many times, but we did break through this area that was both support and resistance right over here. So what we've got here in this situation is a known area near that 1.2250 location, a known area where we have pivoted off of as both support and resistance multiple times in the last few hours that are of data that we're looking at on these charts. So why can't we use it to go to the top side? The answer is we definitely can. So here's our example. Here's another example that we're going to use. And this is going to be an example of when a breakout can be found when price pushes above and breaks and closes above an area of resistance. So we're just going to flip the tables around. We just talked about how to get in for a short. Now we're going to talk about how to use a breakout to get in for a long. So we have identified a level in the market that has been respected numerous times. So what we're waiting for is price to finally get over it. Well, this first candle went a little bit wacky. There was a lot of volatility here. This candle in particular that I'm talking about. We have a huge wick that tried to get through support, did get actually quite a decent distance beyond, but was snapped back below. That could be an indication that the market is getting ready to break through that area of support. So this is our heads up candle, if you will. This crazy wick that pushed far beyond. Now, it's not the candle that I'd be looking to enter into on. It's just the candle that causes me to want to pay a little bit more attention and be ready for that breakout should it happen, because it might be coming around the corner. It could be a little bit of foreshadowing of what's to come, if you will. So we've got this candle here that pushed through, wasn't able to close above. We don't consider that a break, so I'm not in yet, but I am on alert mode. Then, what are we given? We're given another candle. This one has a large wick underneath it, but a very powerful upper body. Very, very powerful upper body. Little to no wick on the top side of that. And it does blast through this level and close comfortably above it. Now, it isn't a massive close above it, but it is an indistinguishable close above it. It is indisputable at this point. It has comfortably worked its way above this level yet again and closed. Now, it's at this point here that we can either try to jump. This is where the dance comes in, the balancing act. We have to decide how early do we want to get in, or how late do we want to get in terms of waiting for confirmation. We get in too early, we might not have waited for enough confirmation, and price could snap back below. We get in too late, price might already be up here, and we have missed our opportunity to ride in the majority of that movement. So what I like to do, same as before, I like to wait at least one candle, see what the next candle does, and take it from there. So the next candle came along. We had a hard spike up. We had a spike down. We came back down to this area that had previously been support and then resistance. And guess what? Right here, the market said, this is trigger time for me. This is what the market's telling me. When the market came back down here, we had a very difficult time getting back below that candle, and price snapped it right back above. We had a very small push below, and the vast majority of price was trading well above this broken level. So It's at this point. It's at this point when I see price come back down and start rejecting and going back above and pushing all these new highs, that I say, all right, I'm going to be looking for an entry in for a buy, which means I'm looking to go long here. I'm trying to make a position where I will gain profit as long as price continues to rise. I want to do that as long as I can get in somewhere with my back to the wall. Remember the proverbial wall? We were talking about it over here when we broke below our support and we used it as a short opportunity, right? Back here near the circle. Same thing applies here. Now that we have confirmed that we do in fact have a break, we feel comfortable with our position, we feel confident, and we expect to make a nice gain here. Our goal is to get as perfect of an entry as possible. It's always to get the best. We don't want to just get in sloppy ever with trading. We want to do our very best always. So my ideal zone, trying to look to get in, would be the closer to this level, the better. Now this is going to be a matter. You're going to say, Chris, well, what is a, how close is close enough? And that is going to be something that you're going to have to decide on your own. It's more of an individual question than one size fits all. Some people feel more comfortable getting in a little bit with a little bit of a wider range, a little bit farther off of that level, already past that level, that broken level. Some people are a little bit tighter, a little bit nittier, and they prefer the higher accuracy and the better payout structure at the expense of missing more positions, of being tighter and nittier. So once again, it's going to be a matter of personal preference what you choose to do. There's no one right answer to this. There's a lot of ways this can be done profitably, and there's a lot of traders that do this profitably every single day. But anywho, going back to our example here, we had a nice push above. We had confirmation that we broke. We had price moving up, pushing some very, very comfortable highs, coming back down, showing that support is now functioning somewhere near this previously broken resistance. So at any logical, seemingly close price to this line, I'm going to be looking to get in for my buy. So say I get in for my buy, I'm looking for price to travel upward, right? I want price to go up, and that's actually, in fact, what it did. And this is a good example of what we were talking about earlier when I first started the webinar. Remember how I said that a breakout is generally seen as a forecast for increased volatility and trend and directional heading in the direction of the break that we had? I said that at the beginning of the webinar. A breakout is generally, many traders view it as a forecast that there's going to be a large increase in volatility to come, and generally speaking, that volatility is expected to continue in the direction of the trend that just in the direction of the break that just occurred. I'm sorry that I'm stumbling over my words. Just bear with me, folks. But anywho, so we had this beautiful break. We'd be looking to get in for our buy, and it's at this point up here. I'm going to clean these charts up a little bit just so we can make this a little bit clearer for you guys. One second. So here's our level again. Here's our support. It's here that we had our break. This is the direction that we want price to go. We want price to move. We want price to move after the break. But it's up here. And we notice our first issue, and this would possibly be when we're looking to get out. So say we got in somewhere inside this beautiful circle that I have now put an X in. Say that was our target zone, somewhere inside that ellipse, somewhere inside that circle we were looking to get in for our entry. And boom, we go up like a rocket. Nice entry, solid gain. We rocket up from 1.2250, and we rocket all the way up to the 1.2280. So making some good gains there in a very short period of time, relatively speaking. But what happened up here? It's at this candle here that standard price action, Japanese candlestick patterns, let us know that we might start being in trouble. It looks like we're starting to run out of momentum in this candle. This candle has gone and hit the same exact price location, that 1.2280, which happens to be a round number, which we know could be due to some type of psychological level developing because it is a round number. We have a lot of people anticipating selling or beginning to sell there, and as a result, it's slowing that buying momentum down. And what it means to us is, we might not be able to continue rising at the rate that we were initially rising at. So it might be a good opportunity for us to begin looking for an exit. So we see this candle form. We have a wick on the top side, no new highs, hits the same exact highs, and then rejects from the same exact location the previous candle did. Very small body, not nearly as powerful of a bullish trigger as we had before, a bullish sign. And then the next candle comes along, hits the same spot, and rejects again. Now it's at this point with 3 rejections from this exact same price point that I'm going to be saying, okay, looks like we're hitting a wall here. I want to get out as soon as possible and preserve my profits. So in this situation, once again, if I'm looking to scalp the market. So in this situation here, boom, reject. All right, now I'm on alert. Boom, reject. All right, now we have confirmation there's something going on there. And then by the third one, boom, we really shouldn't be looking for a whole lot more than that because we wait much longer than that and chances are prices can be coming down. And that's actually what it did, even though it did end up recovering a little bit and going back up there. But nonetheless, we started seeing this pattern of the lows getting lower and the highs getting lower and the lows getting lower. So somewhere around noticing this rejection right here would be when I'm starting to exit the position, when I want to get out of the position. I want to preserve those profits. Had we gotten out in any one of these, it was apparent by the second candle that we had resistance going on here. By the third candle, that's a hell of a strong confirmation that we're seeing some heavy, heavy resistance around this location, and we really should be looking to preserve some of those profits if we can. So there's really no reason I would expect to see this position hold on a lot longer than it did here if we were just looking to scalp and take advantage of some of that breakout volatility that came into the market, because obviously it's no longer controlling the market and it's no longer driving the market. So we would have had a very, very easy time getting out of this position with profit had we entered in. Now, how much profit is going to come back to, how precise or how good of a trader you are and how quickly you're able to read that resistance up there. But any one of these candles you exited on this one or this one or this one or this one, any one, beginning at this small bodied bullish candle, once these highs started getting lower, if you got in at that candle or the one after or the one after or the one after or the one after that for that matter, all of them would have represented a positive gain, and you would have been looking at profit there regardless. So that is pretty exciting. So nice, strong example there. Now, we did actually have another break above resistance. As you can see, this area began functioning as resistance yet again. And then finally, the market said the buyers were coming back in and they say, hey, we're going for breakout round 2. And we can see that up here at the top right once again. But we're not going to talk about that one just yet because I want to move on to some examples of trend lines being used as a breakout location. Now, we know that trend lines, once again, we have discussed trend lines themselves individually in a previous webinar, but for those of you that don't know, a trend line, think of it as nothing more than a diagonal area of support or resistance, a diagonal area of a supply or demand zone. So with trend lines, the same thing applies. Now, I'm going to see if I can find one. It might take a second. Trend line breakouts are a little bit more difficult to come across. But I'm going to try to find a top line trend line breakout example, meaning where we see a trend line on the top of price be essentially a functional diagonal area of resistance broken, and then we can look for a buy position. And I'm also going to be looking for a bottom trend line break, meaning an area that is functioning as a diagonal area of support that is broken, and then we'd be looking for the short. So let's see what I can find here. Now, these are a little bit more difficult. Horizontal areas of support and resistance are quite a lot easier to find, and they will be more prevalent in your trading, generally speaking, as a newer or just as any type of breakout trader in general. It's more common to see. But let's see what we've got here. All right. We could use this for a bottom one right here. Let's go ahead and use this. All right, shall we? When I say this, I am talking about this right here. All right. Here we have a beautiful example of a trend line. Nice area that is functioning as support for the market, moving upwards diagonally. It is on the bottom of price. And that's why I say it's functioning as support. It's an area that price has come down to, hit a point, found support, bounced up off of. It came down again, found support, bounced up off of it, came down again, continuing this angle of attack, bounced up off of it, bounced up off of it. You guys get the idea, okay? Very good example of a trend line in progress, an area functioning as support over and over again, climbing at a very similar rate. Now, it's over here we want to pay attention to. All right. Ooh, that's not what I wanted. Okay. So we have an area that is a very, very easily identifiable trend line, hopefully to all of your beautiful eyes. We have an area in the market that we are finding support at as we climb at more or less a predetermined angle. So we've been bouncing up off of this, treating it as an area of support. Now, just like we were talking about previously with our horizontal areas of support and resistance, trend lines are going to be very similar with the breakouts and the way it's played. Once again, we're going to look for a candle that's going to close below, in this case, because it is support, it is functioning as support, it's holding price above it. We're going to look for a candle that changes the mold. We're going to look for a candle that closes below finally. We had no candles before closing below. We had a couple small dips and wicks, but we snapped right back above. But we're going to look for a candle that closes below, and that's what we had over here. This weird bearish pin bar that we have essentially closing below was the first candle that did. It worked its way below, and you can see there's a little bit of turbulence. The market was trying to decide, is this it? Is this where we're really going to go for the ride? And it did. It closed below. Now, once again, just like before, we're going to say, okay, we don't want to jump in too early. We want to make sure that it isn't a false breakout. We want to make sure the market doesn't just spike right back above. So what we're going to look for here is we're going to look for this next candle and say, okay, now what's price doing here? And what did price do? It worked its way back up. It kissed the trend line perfectly. Kissed the trend line perfectly, got stuck, and started rejecting, coming back down, and closed, hitting new lows. Powerful candle. So what do we have in this situation? We've got an opportunity to look for a short to try to gain some bearish momentum here in the expectation that the volatility will pick up and the directional heading that we just took on, this breakthrough support, will maintain. Now, let's look at this. So say we got in right here. Once again, the closer to that line, the better for our sell. So we are looking for the market to fall. So we got in for our sell. We're expecting price to fall. Now, the market did come back up in the two candles thereafter and test this level and reject yet again. That's not bad news. If we are already in the position and say we saw price come up and get just beyond our entry, which it all depends on how close we got into that line, but this blue candle did have a higher high and theoretically did push past our imaginary entry. This isn't the end of the world. We're not panicking. And why is that? Because this candle, even though it is a bullish candle, actually tells us more valuable and positive information for us. More good stuff is what this candle has given us. This candle has come back up and rejected again off of that line. It has given us a third strong layer of confirmation that this break is being respected for the time being. So that's not an indication for me to bail, even if I am slightly negative at that point. I continue to hold in this situation, and I am greatly rewarded as the market plummets. Now, as we work our way down here, this is where we're going to start to notice some weird stuff, and this is just going back to basic price action. This is how we know when to get out of these positions. Well, what do we notice to the left? The very core, the beginning of this trend line, right? The beginning of this trend line started somewhere near that 1.2255, we'll call it, the 1.2255. This is an area that the market had initially hit during a very strong selling window. A lot of selling momentum going on here, and the market pivoted, and we actually changed directions off of this. So this is an area in the market that I am going to definitely be on the lookout for if I am involved in a sell. And in this example, I would have been involved in a sell. So I do want to watch out as price approaches this level, because if it had enough strength to stop the market when it was moving this fast over here, I definitely want to watch out at any point, no matter how fast the market's moving. If it was able to reverse it over there, it's definitely possible it might reverse it in the future. So it's at this point I'm going to start getting cautious. And what did we notice as we worked our way down? As we worked our way down over here, this candle came along, and my white line is drawn over it, but the wick actually did come all the way down here, bounce hard, and actually give us a bullish close. Now, the highs are still lower. The highs are still are decreasing. This high is higher than this high is higher than this high. So we have consecutively lower highs, and as a matter of fact, our lows are actually, generally speaking, getting lower as well. So that's not terrible, but the fact that the market did bounce so hard off of this level does trigger me to say, okay, it's time to look for an opportunity to get out here, lock in my profits, and go on with my day and look for another position. So what goes on here is after seeing this strong bounce, I'm looking for opportunity to get out. The next candle gives us just that. Price comes right back down to this level, tests it yet again. Oftentimes the market likes to test these levels more than once before it makes its final decision. Came back down. We would have been offered any time in this candle. We would have had a great opportunity to get out of this position for a very nice positive gain had we got in from here to here for a sell. Obviously, that's a very clear decline in price. Now, it's at this next candle when all hell broke loose. The market gained a lot of strength at this level. Near the 1.2255, we started rallying hard, and we had a very powerful bullish candle here, almost a bullish engulfing, gobble up the previous bear, set new highs by far, and just have a ton of power. Say we made a mistake. We weren't able to pay. We didn't pay attention to this blue candle. We didn't pay attention to this red candle, and for some reason, we're still involved in our position, haven't pulled out with our profit. Even during this candle, we would have still had time to get out with marginal amounts of profit, most likely, and still, close our position off, or even close it off as a wash, where it's just kind of a break-even position. Had we made a mistake, because we did initially make our position correct on a correct read, and we were heading in the right direction. That's the beautiful thing about taking a good trade. Taking a good trade makes it a lot easier to get out of a trade, because you have a lot more room to work with if you start off in the money instead of out of the money. But this is an example of a trend line breaking and a breakout entry being possible, and also how to possibly exit or close off and preserve those profits after using a trend line breakout as an entry point. I'm going to keep moving the charts around, guys. I'm going to see if I can find an upper trend line or a trend line possibly going in a different direction where we're looking for a buy instead of a sell. So let's see what we can find here. Real quick, guys, this is not a trend line, but this is a beautiful area that was functioning as resistance and then broke through that we could have used as a possible breakout location. And if your eyes haven't already fixed to it, it was right here. So we had an area in the market that we found resistance at multiple times. Even right over there was resistance. And then once passed through, a very powerful candle actually tried to come back below, and market pushed it up. We already have confirmation in the breaking candle in and of itself. And then the price actually came back down, started treating it as support. We could have gotten in for a buy at any point in time and wouldn't have actually been worried about our position until realistically up here when price is making some pretty textbook definition examples of a reversal. Really, this candle right here is the one that seals the deal for me. So not a whole lot of gain to be had in this particular example, but definitely a very, very easily profitable position. It might not have been the biggest trade known to man, but it was possible. So I just felt like mentioning that. Also, had we been looking at a situation like this, this is an area where we obviously found a lot of resistance at historically. Once we got back above, it started functioning as an area of support. Once again, another beautiful example of a breakout happened here where we could have been in for a buy and had a few opportunities to get in and possibly leave once the market became stale and it's no longer worth rising for a very small gain. Well, a substantial gain. But it functioned as support over and over and over and over again. Now over here we had some weird action. We dipped a little bit below, worked back above, but because of how many times it functioned as support, we're always going to be on the lookout for it. And sure enough, support being shown around this level yet again. And then back over here, once again, support. Now it is at this big candle here that we had a very powerful break. And if you look at the candle right to the right of it, this candle is still a very, very powerful bearish candle. Didn't even want to go back and test that line. It's at this point that we could possibly look for a sell to ride the market downwards, and definitely would have been looking for a profitable position here. When once again we look to get out when the market stops going down, and it looks like it's possibly getting ready to go back up. And we had a very long period of time, 1, 2, 3, 4, 5, 6, 7 candles, and these are 15-minute charts. So you got 7 15-minute candles where the market stopped falling that we could have closed out with some very comfortable profits around here with a gain. Even if we got in down here, it still would have been a very measurable gain. So some good stuff going on there. I was trying to look for another trend line example, but like I said, those are a little bit more difficult to find, but there's all kinds of beautiful examples in front of us, so I didn't want to pass over them and not mention them. But while we're on the subject, we do have a I wanted to show you guys some examples of what a false breakout looks like, and I think that's a little bit more important right now than finding more examples of a trend line breakout, because we already have covered that essentially, 4 or 5 times now, at least the breakout in and of itself with the inclusion of the support and resistance breaks, the horizontal ones. But we have a very nice area right here that I was just talking about that I'd like to use. So let's go ahead and take a peek at this. So right here is where we're going to be focusing our eyes in on. All right. So this is an area where, once again, we found support at this area. Lots of support. And before it was support, it was a very strong area of resistance. Okay, so very undisputable level here, right around this 1.23, just below the 1.232. We'll call it the 1.2315 or so. But it is an area in the market that we have found for one reason or another. Like I said, it could have been due to previous swing highs or lows, any of the things that we know that cause these levels that we've talked about in previous webinars. Like I said, it could be a swing high, swing low that caused it. Could be a psychological level. In this case, I doubt it's a psychological level because it's such an arbitrary number, but it is an area nonetheless. Indisputable area in the market. Now, it's at this location here, on this candle here, right here, that our eyes, I'm trying to keep my line as straight as possible, that our eyes have noticed a break in this beautiful level. So, going back to everything that we were just talking about and everything that we learned, it's at this location that we're going to begin looking for entry. Now, just like I said before, this isn't the candle that I'm looking to actually enter my breakout. I want to see what the market does. So what we have here is a very small candle that looks like it possibly came up and tested a little bit, but didn't really give us a whole lot of action. And it also did not get any lower. And as a matter of fact, your eyes might not be able to pick it up, but this candle actually didn't even hit the same low that the previous candle hit. So technically it has a higher low. So we've got a very argumentative situation here just due to price action, kind of a weird occurrence. And this could be a sign that the market's looking to snap above. So in this situation, we're going to wait. Okay, we're going to give it that confirmation, maybe just to see what the next candle does. And what do we have? A candle, powerful bull. Once again, the lows are higher yet again. And we also worked back above and closed above. We have new highs and we closed above that level that we had just broken above. When we see that, I am no longer interested in selling. I don't want to sell in the situation because this is already starting to look real shady. It's starting to look like a fake out to me. The market's not respecting this or the volatility and the volume and the directional heading that we wanted to see, the momentum that we expected to enter the market after closing below. It's not there. It's not there, or we wouldn't be pushing so comfortably back above. So it's at this location right here with this blue candle that we say, okay, maybe a better idea to avoid this entry. Now, it is possible that we had gotten in and somehow closed out of this with a marginal amount of profit, but I just don't believe that it's worth it. This is what a fake out looks like. It's when price closes below and finally breaks, and then essentially immediately comes right back above. That's not a good sign. That's not a strong sign for us. We don't want to see price ever getting back above that level that was broken if we're looking to use it as a trampoline, because if price is able to trade back above that level, then the whole basis on our trade is essentially out the window. So had we avoided that, it probably would have been a pretty wise decision, because price did end up shortly thereafter working quite comfortably back above and trading on top of it, using it as support again. So that's an example of a fake out, and we do want to focus in on that. It's extremely important to be able to identify fake outs. A fake out is if we can put a cap on our fake outs, if we can better identify what's real and what's potentially not going to give us the results we want, we can in turn increase our equity in the market. We can increase our profit, our expectation of profits, and our just overall winning rate, because we're avoiding less, these environments, these situations that are less conducive to winning. So that is a beautiful example of a fake out and how we can possibly identify one. I'm going to scroll the charts back a little bit more and see what else I can find. I'm just going to kind of wing it. I'm not going to look for anything particular and specific, anything specific, because we essentially have covered everything at this point. But I would like to, possibly throw some more examples on the board if I can find some good ones. So let's see what we can find here. Here's a nice opportunity. Okay, so once again, what do we have here, folks? We have an area where the market. This is just this once again. This is support. This is not a trend line, but we have an area in the market where we found support here, 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 numerous times over here. And then when we finally reached over here, the market went ahead and had some difficulty, had a little bit of turbulence, but it did close through. Now, we did close through. We did have a significant move below. We started finding support shortly thereafter, though, so it wasn't a very powerful one. But we did break through. We did have a bearish move below this. So it is possible that we could have looked in for a sell here and actually come out with some profit. But this is more likely than not a situation in which we probably would have been closing out a trade about break even, because around this candle here, we'd be on our look. Around this little doji flipperoo candle, we have a little bit of a bullish situation here where the low has found some support, notably here, and we're starting to look bullish, and it looks like the market's starting to head upwards. Had we not gotten out exactly at that time, the next candle would have been our trigger to get out, and at that point, it would have been a marginally profitable or break-even trade. But that's not what we want to focus in on. What I want to talk about here is that this area very notably became an area of resistance once passed through, so the level is still in use. It's just being used the other way around. So at this point situation, I'm going to be looking for a possible break back above that level and try to use it as a buy opportunity. Now, what we could have done here is waited. Now, like I was talking about before, this candle has a long wick that did push above. Now, I don't want to be in on this candle because it still hasn't theoretically broken in my mind, because I determine a break based on when candle closes above. But this candle is our, hey, pay attention candle, because we might have one coming. And sure enough, next candle came along. Very powerful. This candle right here, this big blue candle, extremely powerful bullish break. Extremely powerful bullish break. So we wait for the next candle to see what price is going to do. Next candle tries to come down, not even really successfully, and still is held up in the air. So it's at that location we might be looking for a buy. So probably trying to get in somewhere around here for a buy and look to see what the market does. And as you can see, the market had one weird swinging doji candle over here. But absent of that, the market has essentially only traded above this location as far as your eyes can look to the right. So there was a buying here would have been essentially buying at the relative low of the market and looking for a pretty profitable position here, in which case we probably would have gotten out somewhere around here when we started noted some serious resistance. Now, had you held, obviously there's some more profit potential theoretically, but I'd rather speak on what's more realistic than what it coulda, shoulda. So realistically, we could have looked to get in for a buy here. Never ever closed back below this candle, so we're still holding our position. We're still in for our buy. And what do you know? All of a sudden up here, we start running into resistance. And it's at this point that we say, hey, it looks like some of that bullish momentum is wearing off. So we're going to go ahead and lock in our gains, which would be rather substantial at this point, and go ahead and close off with a small profit. But other than that, folks, it has been a pleasure. If you have any questions at all, please feel free to ask them. Or if you don't and you enjoyed yourself, that's great as well. You can always shoot us a message after the webinar as well. We are always available and ready to help you guys if you contact us. We love working with you guys. I enjoy helping you guys succeed, because I feel more gain from that than gaining in the markets myself. So like I said, I do trade myself. I do the education here, but it's the education that really drives me. I really enjoy the educational aspect of watching others grow. It's very very rewarding for me. So if you do have any questions, please don't feel intimidated. Don't worry about how silly you think the question is. You definitely can just contact us and ask it. But guys, I think I am going to wrap it up. Doesn't seem like I have too many questions or anything along those lines at the moment. So I take it that it was rather easy to understand, hopefully, for everyone. But it has been a pleasure, guys. This has been another production by Earn to Trade, of course. I thank you all for joining me. My name is Chris. As I said at the beginning, I will see you all back here next week, most likely, for another wonderful webinar, or I will see you later on when I recap the markets. Thank you for joining me for a lesson on breakouts, guys. I hope you put it into practice in your daily trading and get some great use out of it. Other than that, folks, thank you. I will see you soon. Best of luck and happy trading, everyone.